Welcome to AlphaCall, where we go beyond the filings to uncover what management really means. And today we are talking about India Energy Exchange, or IEX, the backbone of India's power trading ecosystem and one of the most quietly profitable businesses in the energy space. Now, at first glance, this quarter looks steady, but beneath that calm surface, IEX is positioning itself for a very different future, a future where trading electricity, carbon credits, and even natural gas or coal all happens on a single integrated digital platform. Let's break it down. First, the quarter in numbers. For the quarter ended September 2025, IEX delivered another solid performance. Revenue from operations came in at around 154 crores, up roughly 11% year on year, while profit after tax grew 14% to about 123 crores. Margins continue to be industry leading, with EBITDA at roughly 87%, reflecting the pure technology nature of the exchange business. Total electricity traded through IEX was 67.6 billion units, marking 15.5% growth over last year. And for the first time ever, the real time market, or RTM, overtook the traditional day ahead market. A small but symbolic milestone that shows how India's power system is becoming more flexible and responsive. So, while revenue growth might look moderate, operational metrics and liquidity on the exchange are moving in exactly the right direction. Chairman and Managing Director S.N. Goel opened the earnings call with a clear message: liquidity is back. He pointed out that coal supplies have normalized, hydro and wind generation are strong, and power generators are finally being paid on time by distribution companies. Average day ahead prices fell to about 4.2 rupees per unit, nearly 20% lower than last year, purely because there's now more electricity available than before. The real time market prices were even lower, which is why several state discoms shifted their short term procurement to that segment. In other words, power is available, liquidity is abundant, and the market is functioning the way it is supposed to. Let's quickly look at the segment performance. On the product side, the real time market continues to be the star. Volumes here grew about 40% year on year, making RTM the single largest contributor to total trades on the platform. The green market, which includes renewable electricity and renewable energy certificates, also performed steadily. About 97 lakh certificates were traded in the first half of the year, only slightly lower than before as REC prices stabilized. CFO Vineet clarified that revenue growth appeared slower than volume growth, mainly because IEX had cut transaction fee on RECs from rupees 10 to 5 per certificate. That reduced income a bit but helped boost trading activity and market depth. Meanwhile, the company's Indian Gas Exchange, or IGX, continues to scale gradually. IGX traded close to 16 million MMBTU this quarter. That's about 36% higher than last year, supported by stable gas prices and higher consumption from the power sector. Now, IEX still owns about 51% of IGX and has applied for an extension from the regulator to reduce its stake to the required 25%. And then there's the International Carbon Exchange, or ICX, another future growth lever. It issued over 82 lakh international renewable energy certificates in the first half, already surpassing last year's total. IEX is also preparing for the rollout of domestic carbon credit rating, expected sometime in fiscal year 27 once the final regulations are notified. So, across electricity, gas, and carbon, IEX is building a broad ecosystem around clean energy trading. Now, let's also talk about what analysts really wanted to know from their earnings call. And the most debated topic was market coupling. a regulatory move under which all exchanges will share a single price discovery platform managed by a government entity. Analysts were worried that this could reduce IEX's pricing power and margins. Mr. Goyal's response was calm but firm. He said, "Coupling hasn't happened yet. We have appealed the order and we are focused on retaining market share through technology and customer loyalty." In short, no panic, just preparation. Another question was around why revenue growth trailed volume growth. The CFO explained it was due to the fee cut on certificates and a shift in product mix. Electricity revenue actually rose around 11%, and only the certificate side dipped, pulling down the average. Analysts also asked for guidance on volumes. So the management expects 15 to 20% growth in power trading for the full year, despite a sluggish first half for national demand due to heavy monsoons. That's impressive resilience given that India's overall electricity demand was almost flat. And finally, questions came up on new products like green real time markets, peak power contracts, and virtual power purchase agreements. CERC has already heard the petitions and reserved its order. And once approved, these products will expand IEX's role in enabling round the clock renewable trading. And from the investor presentation, four big structural drivers stood out. First one, rising demand. India's power consumption is projected to touch 2,300 billion units by 2030, and IEX's own growth historically runs about 2.5 times that of system demand. Second, new products and regulatory reforms. The company is waiting for approval to extend its term ahead contracts up to 11 months and to introduce green RTM and peak hour trading. Third was energy transition. With battery storage and dispatchable renewable projects coming online, exchanges like IEX will become key platforms for arbitrage between solar hour surpluses and evening hour deficits. And fourth, diversification. Gas trading through IGX, carbon certificates via ICX, and even discussions with the government about setting up India's first coal exchange all positions IEX as a multi commodity energy marketplace rather than just a power bourse. So, in a macro context, the bigger backdrop remains encouraging. Thermal power still accounts for about 70% of generation, renewables around 28%. But renewable capacity additions are accelerating. Inter-regional transmission capacity is expanding fast, and India now enjoys 99.9% congestion-free grid availability. And coal inventories are healthy. Imported fuel prices are down nearly 20%, and electricity distribution companies are improving payment discipline. Now, all of that creates the ideal environment for power trading, which are high liquidity, low volatility, and transparent price discovery. So, what's the road ahead? Looking forward, IEX expects volume growth in the mid teens, stable margins above 80%, and healthy cash generation. The key catalysts to watch include the regulator's final word on market coupling early next year, the rollout of carbon credit trading, and expansion of gas and renewable products through its subsidiary exchanges. And if these fall into place, IEX could evolve from a single platform exchange into the operating system of India's entire clean energy market. So, what's the alpha call takeaway? Here's the big picture. Even in a quarter when India's overall power demand barely moved, IEX still grew volumes by double digits and maintained some of the highest margins in corporate India. That's not luck, that's network effect. The risk ahead, of course, is regulatory, not operational. But IEX's diversified roadmap across electricity, gas, carbon, and soon coal shows it's preparing to stay relevant through India's massive energy transition. And as CMDS Goel summed it up, liquidity is their mode. And for a company that literally powers the market, that's not just a quote, it's a strategy. That's all for today's Alpha Call. This is your host, Radhakrishnan Chonat. Until next time.